All right, everybody. My name is Nicholas Lau from Dallas, Texas. For those of you who don't know me, so what we've been doing for about the last month and maybe a month and a half now is we've been going through the Candlestick Trading Bible together, and it's really helped out a lot of people. It is a long book, so sometimes it's hard for people to read a book and focus on it, especially when the content is brand new. So I thought if we went through the book together and broke it down, and so people understand it better, and it's really been helping a lot. So now, before I get into the Candlestick Bible, what I wanted to do is just play this video on trading motivation every week before the call. I do that. So let me go ahead and kick it off with that. And as soon as that's done, we will start reading out of the Bible. All right.
Nick, just unmute yourself.
Was I muted the whole time?
No.
Oh, okay. All right. So when I shared, you said press share sound as well, correct?
Yes, sir.
All right. And then that allows me to mute out and the sound still goes through?
Correct.
Okay.
When we're right at the beginning, whether that's a new career, a hobby, an activity, or something we're trying to learn, inevitably we look at the people at the top of their game and wonder how it's possible that they achieved such greatness. It seems practically impossible as we gaze at these icons to understand how someone could ever reach such dizzying heights in that field. We tell ourselves, well, surely that person was born with that talent. They were born with that ability. Surely it's not something that can be achieved. It must be divinely gifted. With trading and investing, this seems to be amplified even more because the markets can be brutal and it can feel like you're just not getting it right time and time again. And yet, you look at the people who have achieved what you want to achieve and they're enjoying the fruits of their labor. And there seems to be this huge gulf between the ordinary people and those who finally made it. But the truth is this, they all had to start somewhere.
Gave me a book on technical analysis of stock trends by McGee and Edwards. Tell me, read that. I read it. Go home, read it again. I read it. Go home, read it again. I read it. He goes, you're ready to trade.
They were all amateurs once.
I spent a lot of time at Baker Library just trying to understand and trying to learn about finance.
They all had their struggles and their mistakes.
I had two phenomenal learning periods where I lost everything. Like I had $10,000 and went down to zero. And then I made back like $20,000 and then went down to zero. And I remember...
Are you just using these low numbers so we can understand?
No. This is when you're 22 years of age and it's 1978 or 9. That's just, a gargantuan amount of money.
I've made lots of mistakes, Dave. That's part of the game. I mean, there is no way in the investment business, somebody says to you they never made a mistake, check them out.
They all had their moments where they felt overwhelmed.
I had to let go people who I love. This is 8 years after I started in Bridgewater.
Wow.
I was so broke that I had to borrow $4,000 from my dad in order to pay for my family bills.
They had the same doubters and critics that you're going to see on your way as well.
And I remember my father coming to me on the third time and said, you've got to get in something safe like real estate.
Exactly. Lending.
I said, no, I'm going to stick with this.
When I got out of the University of Nebraska, I applied to Harvard Business School. They told me I was to get interviewed in a place near Chicago. I got there, and he interviewed me for about 10 minutes. And he said, forget it, you're not going to Harvard.
They had the times when everything felt like it was going wrong, and they just couldn't get anything right, and they thought to themselves, maybe enough is enough.
One day you walk in and you think you're a genius. Oh, my positions are in my way. Look, and the next day you walk in and they're against you and you feel you're a dope. How could I have done what I did and so on?
But the difference, the thing that really separated the greats from the goods, the greats from the not so greats, and the people that gave up at the first obstacle, the difference is that they were able to embrace the failures and learn. If anyone told you that this was going to be easy, they were just being kind to you. Nothing with such great rewards, nothing with such self-fulfillment, nothing with such great potential comes without a struggle, without passion, and without the need for pure dedication. So yes, it's going to keep being tough, but the blueprint has been laid out for you. Others have done what you're trying to do, and you can do it too. There will always be people telling you that you haven't got what it takes to succeed in this, that, or something else. But just make sure that those naysayers don't include you. Brush yourself off, embrace your failures, learn from your mistakes, and don't accept defeat. You've got this. Now let's get to work.
I just love that video. So every week I play a trading motivation video, and it's weird. Every single week I play a different video, but one thing that has remained consistent in every single video, they show a clip from The Pursuit of Happiness, which I think is one of the greatest films ever, even though, you know, the basis of the film is not about trading, but trading played such a big role in his life that even to this day, because of that opportunity that he was given in the trading space, absolutely changed everything for his family. So before I get started, I wanted to bring on our leader, business partner of mine. You all know him very well. He is a guest on the call today, Mr. Ali Saleh. Sir, the floor is yours.
Hey, what's going on, everybody? How we feeling tonight? I know it's Friday. The markets are closed, but honestly, this is the time where, you know, the best of the best come together to really hone upon their skill sets and to learn more and to put themselves in a position to win. Sorry, guys, I have my camera off there for a second. So, but yeah, so, you know, what Nick is doing here with the Candlestick Bible, and sorry, guys, I just came back from the gym not too long ago and I was on some calls, so I didn't get a chance to pop in the shower yet. But, you know, the idea with this concept of with learning the Candlestick Bible is to create discipline, right? And, you know, very recently I started listening to David Goggins, and David Goggins is somebody who, you know, I've respected from afar, but I never really had a chance to learn from him. And, you know, I started listening to Can't Hurt Me on Audible, right? And it's funny how it worked out, because I got a notification from Audible last month pretty much saying, hey, you only have X amount of credits left before, you know, they expire. So I said, wow, let me go in here and just buy up a bunch of audiobooks. And sure enough, you know, this one I downloaded and super respected in the industry. I said, you know, let me listen to him. And, you know, I'm going through this book and I'm listening and I'm just like, wow, how could somebody go through all these hardships and, you know, not let life really tear them apart? You know, you meet people in the world who have gone through some of the worst things and like they're damaged for life. And, you know, they go through some of the craziest trials and tribulations that you could ever imagine. And then, you know, you see this man who's gone through the worst of the worst, and you listen to his story and you realize that what I'm going through and the things that I'm going through are really nothing compared to what some other people actually go through. And it really helps put things into perspective. But ultimately, he talks about discipline. And some of the things that he talked about that really stood out to me was he created a scenario in which every single day he made sure that if he ever walked by the sink and there was dishes in there, that he would do that. If he walked by any mess in his house, he would make sure to clean that mess. He made sure to create these small triggers in his life so that he could create unwavering discipline that would allow him to continue to move forward in his life, doing things that maybe most people wouldn't want to do, so that he could be, in what he describes, the best person that God ever created on this planet. That's just a mindset. Obviously, it's not true, but that's just a mentality. So this is why I love this Candlestick Bible session that Nicholas does. You know, as we started, guys, the first one, there was a lot more people on it than there is right now. And that's by design. That's going to happen because people tend to fall off and waver, right? The pressures of the consistency and the commitment to growth and development eventually die out. So, you know, that's just my piece. It's like this industry is truly about the discipline. You know, so many people want to come in and marry a pair and learn it and dominate in the space with that one pair, or they want to get a funded account, or they want to do this and they want to do that. And, you know, when things get tough, they just step away from it, or they let their frustrations and their ego get in the way of them, and they're afraid to reach out for help or to ask questions or to talk to a mentor or to just share their feelings and emotions. So that's just my piece, just be consistent, do the things that you're not willing to do in order to create the discipline that you're willing to have in order for you to be successful. So I appreciate y'all for showing up, because this is a big discipline piece, and using the weekend to forecast and mark up your charts and back test and use that bar replay to really understand the charts a little bit more and go through these books like the Candlestick Bible and whatnot. So huge shout out to all of you for being on this webinar. Thank you for tuning in. And Nick, let's get the show started, my brother. The floor is yours.
Thank you very much, Ali. So I'm going to start in the Bible. I'm going to just keep my camera off so I can go full screen with the actual Bible. And like Ali was saying, the weekend is not necessarily a time to just take off and the markets are closed, so there's nothing I can do. There's a lot you can do. Weekends is when you do your back testing. Weekends is when you mark up your charts for the week ahead. And a lot of people, they don't rationalize that they think because the market is closed, there's nothing to do. I mean, that would be like, you're going to school, right? Okay, if you're not in class, does that mean you still don't study? You don't do your homework? The people that want to be the best of the best, they still put in the time every time. Now, another thing we can do, Ali, in the future is, we can, after we're done with the Candlestick Bible, we can even run it parallel. We could start doing trading view sessions and show people how to use trading view and how to use the bar replay, among other things. And I think that if we integrate what we're learning here in the Candlestick Bible to what we can put on trading view, it'd be absolutely excellent.
100%. I agree.
All right. Cool. So let me just go ahead and start the Bible here. All right. So last week when we left off, we were looking at different patterns and trying to locate them on the charts. So that's pretty much where we are going to go right now. So let me just go ahead and start reading. Now, we left off on page 46. At the end of this, or in the group, if you just scroll up in the group, I put the playlist for the first three videos that we did here. So this is video number 4, and we're starting off on page 47. Now, I think that you get some information about Japanese candlesticks. You know the anatomy of each candlestick and the psychology behind its formation. Now, let's take this exercise to test your knowledge and see if you still remember all of the candlesticks we talked about. Look at the chart below and try to find the name of each candlestick number and the psychology behind it. Like I said, I'm going to play this game too because I still get them wrong. Ali will help us out as well. Okay, so we have this first pattern here. Does anybody want to take a guess at that? Now, last week, I know it's not engulfing, and Ali, correct me if I'm wrong, because if it's engulfing, the bigger candle would be on the opposite side. So,
correct.
Okay, so anybody want to take a guess at this? I know that this is tweezers because they're the exact same size. So number 1 is difficult.
Anybody have a guess at what that candlestick pattern may
do you know what it is, Ali?
I think it's an inside something.
Inside bar.
An inside something, that's my guess.
Yeah, Kathy, you're right. To me, that's an inside bar.
Okay, that's what I wasn't sure. I haven't studied that far into the patterns, but I did look at an inside something. So I was half right then, right?
Yeah, I think so. We'll look at the answers in a second because I don't know what it is, but it could be one of those harami patterns. Maybe you're right. It is the inside version of it. And then this one, like I said, I'm guessing tweezer. Does everybody agree that this is a tweezer? And I get, or no, not necessarily. I guess it could be railroad tracks too, right? Or what are they?
Tweezers, typically you have like equal wicks, right?
Equal wicks, okay. So what would you say that this one is?
Because if it's tweezers, right, is it a tweezer top or is it a tweezer bottom?
Oh, it's stuck in the middle, so it can't be either, right?
Yeah.
Okay, so it's not tweezers. All right, this has to be engulfing. Number 3.
Yep.
Kathy, you want to take a shot at number 4?
That's an engulfing.
I agree. I think it is as well. Anybody else want to take a shot at number 5? Mr. Sanya?
Number 5.
No pressure, no pressure. We're all taking guesses here.
That's it's in my notes, man. I don't know it offhand, sir.
Okay, I'm going to take a shot and say that that's engulfing as well, because it doesn't look too much different than number 4. Ali, you want to take a shot at number 6?
6. I mean, 6 is, I'm not 100% sure what that specific candlestick is in terms of price action.
In my opinion, I mean, my go-to is anytime the next candle is bigger than the previous, you can't go wrong calling it an engulfing. It could be something else.
So, I mean, number 6, that's definitely an engulfing for sure. Because, 4, 5, and 6, if you look, they're engulfing, which would, like, if I'm trading this, right, let's just pretend it's the 1 hour time frame. To me, this is like creation of market structure, right? Because you see price pulls up, pulls down, you have your, your tweezers, right? Let's call them tweezers, whether they're, because the tweezer bottom, right, is bullish and the tweezer top is bearish. So like, let's just pretend we're going to call these tweezers. So I see the tweezer, the bullish tweezer pattern. So that's going to indicate to me that there's bullish momentum coming in. Then we have that bullish engulfing right there. So obviously when I see these bullish candles right here, that's just going to indicate to me like a continuation of pattern or structure. So yeah, we can definitely call 4, 5, and 6 engulfing candles for sure.
And then 7 would be, looks like 7 would be the opposite of 1. So if this is let me see.
So 7.
Mm-hmm.
So anytime it's like an inside bar, right? So an inside bar means that the previous candle, right?
Mm-hmm.
That engulfing candle right there is still bigger from body and wick to the candle that follows it immediately. So as you can see, like in number 7, the black candle from wick and body, right? It's still a bar pattern, right? But in my opinion right here, like I would consider this more of like a more defined harami pattern than anything. I think one definitely could be, it's a harami pattern, but that's inside bar as well. Same thing with number 7.
Cool. All right, let's look at the answers. If you can easily identify these candlestick patterns, you can understand why they are formed. You're on the right path. But if you still struggle to identify these patterns, you'll have to start learning them again until you feel like you master them. All right, let's try to answer. Number 1, correct. Bullish harami pattern, inside bar. Very good. The formation of this candlestick pattern indicates indecision in the market. In other words, the market was consolidating during this session. Number 2, tweezers. Did we say tweezers on 2?
Yeah. Mm-hmm.
We did. Okay. All right.
I mean,
bullish. Okay, I was guessing. But anyways, bullish tweezers. The market was trading up. Sellers tried to push the market lower, but the reaction of buyers was more powerful. This pattern represents the battle between buyers and sellers to take control of the market. Number 3, engulfing. Yes, we did say that. Number 4, engulfing. Number 5, number 6. And number 7, harami. This pattern shows us that the market enters into a consolidation phase during the session. So buyers and sellers are in an indecision period and no one knows who is going to be in control of the market. So I think we actually did really, really well together. And that's kind of the basis for doing these sessions, so we can all think these things through, because when we had time to talk about them, we were actually right on a majority of them, if not all. Cool, good job, everybody. All right, so let's take another exercise and try to look at the chart below to figure out these candlestick patterns. All right. Kathy, you want to take a shot at number 1?
Sorry, I was muted.
Okay.
It's engulfing, bullish.
Yeah, I think so. Okay, Ali, you want to take a shot at? I don't know why 2 and 3 are in the same box, but you can enjoy both of them.
So number 2. So to me, number 2 is like, that's a major indecision candle. And with it being a major indecision candle, some people might call this a doji or like a hammer in some capacity.
Yeah.
And then number 3, also another indecision price action candle. You could refer to that as some sort of harami or hammer, but more that to me, it's more of like another, also, this is also an inside bar as well, because it's smaller than the wick and the body of the previous candle. So I would indicate 3, a harami, 2, they're both indecisions, but hammer, harami, that's what I would say between 2 and 3.
And now, if you saw this on the chart, does it prompt you to do anything or no?
Yeah, because the wick rejection's at the bottom. So so if you look from 1, right? 1, you have major impulsive move, right? You have a little bit of retracement. You have another major impulsive move, another retracement. Now, if you look, we never had a break of structure below the big bullish candle right above 1. So to me, this is still indicating like continuation of structure. So like, let's say if I'm in the trade already, I'm probably going to either A, scale in at this opportunity. Some people might see this price action and tell themselves like, oh, I'm going to get out of the trade because it looks like the price is reversing. So if I'm still in the trade, I'm continuing or scaling it.
Cool. And number 4, I will take a shot and say that's an engulfing pattern. Okay, so let's go here. Bullish engulfing, Kathy is right. Ali, you said hammer, you are right. Hammer, which is the larger body, plus the hammer, you said harami. Very good. Wow, we're really good. We should just start live trading now. All right, bullish engulfing bar. Please, it says, please, I want you to open your charts and do this homework over and over again. You'll see that with screen time and with practice, you'll be able to look at your charts and understand what the candlestick tells you about the market. And this is what I tell everybody, is that if you learn price action and reading the candles will tell you a story. It'll tell you a story of the day, a story of the market, what's going on. You know, indicators are fine. Indicators are great for confluence, but the main thing is to be able to read the actual candlesticks, the bodies and the wicks. Don't worry about how to enter or exit the market for the moment. Take your time and try to master the candlestick patterns discussed in the previous chapter. In the next chapter, I'll arm you with techniques that will help you identify the best entry and exit points based on candlestick patterns in combination with tech analysis. Trust me, these price action strategies will turn you from a beginner trader who struggles to make money into the market, into a profitable price action trader. All right, so here is one of the main things, market structure. Ali has just talked about this a few times, the structure of the market. Ali, before I get started, you want to give your basic definition of market structure?
So market structure is, simply put, the trend in which the market is moving. So regardless of time frame, right? Let's take time frame out of the equation. If the market has been moving in a bullish direction, that's market structure in the right, in the bullish direction, and you have market structure in the bearish direction. The one thing that you have to understand about the market is if price wants to go down to a certain level, it can't just go there. It has to make its way there, because if it just goes there, there'll be like slippage in every direction of the market. So it has to have structure where price moves up and then down and then up and then down, creating higher highs, higher lows, lower highs, lower lows, things of that nature. So that's market structure in the simplistic form.
And it's very true, because, you know, a lot of times when people are not confident of their trading skills, they'll end up exiting a trade just because it goes back on them. They forget the fact that in order for the market to get to where it's going, it needs to go up and down. It needs to go grab that money. It needs momentum. You know, it's almost like a slingshot. You have to pull it back in order for it to go forward. And if you believe in your analysis and you've done all your research, you've looked at your Forex factory, you don't see any major news today that can change anything, then you should stick to your plan. Don't get scared out of the market. The only thing you need to do is protect your profits, right? If it comes back and hits your stop loss, it's okay because you've protected your profits. But the last thing you want to do is second guess your analysis and get out of a trade just because the market is pulling back. So the market structure, one of the most important skills that you'll need as a trader is the ability to read the market structure. It is a critical skill that will allow you to use the right price action strategies in the right market conditions. You are not going to trade all the markets the same way. You need to study how the markets move, how traders behave in the market. The market structure is the study of market behavior. And if you can master this skill, when you open the chart, you'll be able to answer these important questions. What the crowds are doing, who is in control of the market, buyers or sellers? What is the right time and place to enter or to exit the market, and when you need to stay away? Through the price action analysis, you will experience 3 types of markets: trending markets, ranging markets, and choppy markets. So, as Ali had mentioned, trending markets, if the market's going up, it's trending bullish. If it's going down, it's trending bearish. Ranging market is something it's kind of staying in the same general area. Yes, it is going up and down a little bit, but it's not a defined trend. And a choppy market is just when you see candlesticks with like wicks all over the place and a lot of indecision, not a very good time to trade. You don't want to trade in a choppy market. In this chapter, you'll learn how to identify every market and how to trade it. All right. Number 1, trending markets. Trending markets are simply characterized by a repeating pattern of the higher highs and higher lows in an uptrending market and lower highs and lower lows in a downtrending market. Let's look at the example. All right, so as you can see here, it's an uptrend. So how do you know if it's uptrend? Because every new point is higher than the previous point. This is a higher high. This is a higher high. This is a higher high. It's also defined by the higher lows. That means every time that there's a new low that's formed, it is higher than the previous lows. So you're looking for higher highs and higher lows. When you see that, you know you are in an uptrend. As you can see in the example below, the market is making a series of higher highs and higher lows, which indicates the market is uptrending. You don't need indicators to decide if it's bullish or bearish. Just a visual observation of price action is quite enough to get an idea, okay? So when you look at the charts, you should be able to see with a naked eye if it's an uptrend or a downtrend. Doesn't matter if you're on the monthly chart, daily, weekly, hourly, you will know by looking at the market if it's trending up or down for that time period. Now, look at another example of a downtrending market. So same thing, it's inverse, right? So when the market's going down, the next high point is lower than the previous high point. And the lower lows is that every time it makes a new low, it is lower than the previous low. So when you see this with the naked eye, it just looks like a staircase, right? You're just going down, 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 okay? And then you know that you are in a downtrend. The example above shows a bearish market. As you can see, there are a series of higher lows and lower lows, which indicates an obvious downtrend. Trending markets are easy to identify. Don't try to complicate the analysis. Use your brain and see what the market is doing. If it is doing a series of higher highs and higher lows, it's simply an uptrend market. Conversely, if it's making a series of lower highs and lower lows, it's obviously a downtrend market. According to statistics, trends are estimated to occur 30% of the time. Now, we went over this last week. We're going over a lot of the things we went over last week because it's very, very important. That's why we're going over it again. Okay, so trends are only happening 30% of the time. So I think, Ali, you would agree that that means 70% of the time, the market is not giving you anything to work with. So you have to really focus on the 30%. Is that accurate? Or?
Yeah, that's why most traders, profitable traders, are really only taking like maybe 3 to 5 setups a week.
Right. And it's a huge deal to think that I have to look at the charts and I have to sit here for so long to maybe take 3 or 5 trades a week. But the thing is, you take the correct 3 or 5 trades, it can make you in 1 week what a lot of people make in a month, sometimes more than that. We've seen professional traders in 1 week make more money than some people make in the entire year. And that's because they trust their analysis. And when they go in, they can go in with, with confidence that, hey, I'm going to put some good money on this because I trust my analysis. And this is one of those 30% of the times a week where we have a good setup. Now, to determine whether a market is trending or not, you have to use bigger time frames, like I mentioned earlier, like the 4-hour, the daily, the weekly. Never try to use smaller time frames to determine the market structure, okay? Now, when you're on a smaller time frame, like the 5-minute chart or the 15, you could check for that time period if it's an uptrend or a downtrend, but do not determine the market structure based on that. You have to go out to a higher time frame to look at the market structure. Now, how to trade trending markets. If you can identify a trending market, it would be easy for you to trade it. If it's a bullish market, you will look for buying opportunities because you have to trade with the trend. And if the market is bearish, you have to look for selling opportunities. But the question is, what is the right time to enter a trending market? Trending markets are characterized by 2 important moves. The first move is called the impulsive move. Ali had explained that earlier when we were going over the market structure, the impulsive move. The second one is called the retracement move. So impulsive move is when it goes in the direction of the trend, and the retracement move is when it pulls back. Like I had mentioned, a lot of times people get scared, and when the market pulls back, they'll exit the trade. They'll either take a small profit or even take a loss thinking that they're going to lose more. And what happens as soon as they close the trade, the market corrects itself and it goes back down to where they wanted to go in the first place. All right, so here we go. So you see we go up with an impulsive move and it pulls back. Now, what did Ali say earlier? It has to pull back because it needs to go to where it needs to go. It cannot just go in a straight line all the way up. It won't work. The market doesn't work that way, okay? Because all of these candles represent money. When you have support and resistance and zones, all that represents money. So when this retraced back down here, there was probably a zone here of money that needed to be collected. When it collect that money, boom, another impulsive move, and so on and so forth. And that's how the market structure is formed. As you can see, the market is making higher highs and higher lows, which indicates a bullish market. If you see this market, you will think of buying. But as you can see, the market is making two different moves. The first move is an impulsive move, and the second one is a pullback or retracement move. Professional traders understand how trending markets move. They always buy at the beginning of an impulsive move and take profits at the end of it. This is the reason why the market makes an impulsive move in the direction of the trend and retraces before it makes another impulsive move. If you are aware of how trending markets move, you will know that the best place to buy is at the beginning of an impulsive move. Traders who buy an uptrend market at the beginning of the retracement move, they get caught up by professional traders and they don't understand why the market hits their stop loss before moving in the predicted direction. So here's another example of a bearish trend. So same thing, except for we're going in the opposite direction. Down with the impulsive move, pull back with the retracement, down with the impulsive move. So maybe after I'm done reading, if Ali is free, maybe he can pull up his trading view and kind of show you this. Because one of the things that we went over, Ali, if you remember a couple of weeks, we had this discussion about, rather than pulling out of trades, if we trust our analysis, we should be taking multiple entries, correct?
Absolutely. Scaling it.
So let's just say we got in on a sell right here. We come down. Now, when this market pulls back up, a lot of people actually get out of the trade and just save this profit. What we have determined is if you trust your analysis, you could actually take another position right here. And now you have two positions open. Now, when it comes down, you can move the stop loss for this one and protect these profits and let this one run. Is that correct?
That is correct, sir.
Okay, so when we're done, Ali will pull up his trading view and show you like real examples of this happening in the market. So the illustration above shows a downtrend market. As you can see, the best trading decision is to sell the market at the beginning of an impulsive move. If you try to sell in the retracement move, you will be trapped by professional traders and you will lose your trade. So basically what it's saying is don't try to enter the trade when it's pulling back. That's where the professional traders will trap you. You need to know when to get in during the impulsive move. Now we know how to identify downtrends and uptrends and how to differentiate between the impulsive move and retracement move. This is very important for you as a price action trader to know. But the most important question is how to identify the beginning of the impulsive move and to enter the market in the right time with professional traders and avoid being trapped by them. So just to go back to the point. So what they're saying is you don't want to get trapped trying to take a sell in this area. Now, I know that doesn't look like much movement, but we don't know what chart this is. We don't know if it's the 4-hour chart, the 1-hour chart. One of these candles can represent 20, 40 pips. You don't know. And if your stop loss is 20 pips, this one single candle during the retracement can take you out. So you see this down move, you decide, oh, I'm going to get in right here because I think it's going to keep going down, right? That candle comes, it hits this point, it takes you out, and then boom, it goes back down again. That's why it's important to know these patterns. Now, if you knew these patterns, you would see that you have this bullish candle, and then you have this bearish, and then you have this other bearish. So you have, I believe this is like, is this a morning star pattern? So this might tell you that, hey, this is a good time to get in, maybe on this candle or at the start of this candle, not any of these candles in the middle, because there is nothing in here that indicates that it's a good time to take the trade. Okay. So to predict the beginning of the impulsive move in a trending market, you have to master drawing support and resistance levels. So what are support and resistance levels? How to draw them on our charts, And this is what we'll see in the next chapter. So I'm going to go ahead and stop right there. Next week, we'll pick up at page 57 as far as reading. Ali, if you are free, if you want to show trading view and the impulsive moves and how to set up support and resistance, that would be awesome.
Yeah, for sure. Let me just get all my clutter out of the way, and I'll go ahead and share my screen right now.
And if anybody has any questions while Ali is setting it up, then feel free to ask. I hope you guys are all learning. Let's see, you got Kathy, Justin, Nitesh, Demi. Hopefully everybody is learning from this session. I know it's a little bit of a repeat from last session, but I just think that these type of things, the market structure is so important that we need to actually see it visually. All right, go ahead, Ali.
Okay, perfect. So, all right, so this is actually GJ. So let me see. Let me go ahead and pull this up. So this is GJ. I've been messing around with GJ for a while now. As you can see here, like Nick was talking about how the markets are only really in a trending market for like 30% of the time. I mean, this isn't really trending, right? This is, and I'm on the 4-hour time frame. I mean, you could consider this a trend, but really it's not like, this is a big move because it's GJ. So there's a lot of pips in here, but really for GJ, for it to be like considered a trend, you want to see something like this, right? Like 800 pips, because it's not AU. If we were looking at AU, that's a completely different scenario. But let's go ahead and break kind of down what we got going on here and why you see so many positions open. So like for instance, I took buys on GJ all the way from, the 19th of December all the way up. This is essentially what I would consider a demand zone or order block, and I consider this my supply zone. This is where price rejected multiple times to create an area of which people would, typically want to see sells happen. And this is also a major order block. If we go in the higher time frames, you'll see that price came in here. It really created some big bearish movement from this particular level. So this is a very key level for me. And seeing these levels right here, these are also very key levels for me, kind of like a launching pad for price to go bullish, launching pad for price to go bearish. And as you can see here, price came into this level, skyrocketed. Now, as you can see here, major bullish momentum. I mean, just candle after candle after candle. And this is a 12-hour time frame, guys. So just imagine how much bullish pressure is here. The yen could have dropped dramatically. There could have been some crazy news on the Japanese side that caused this, but on the lower time frame, as you can see here, when I take out my brush tool, we have price come in, get a little pull back, price comes in, get a little pull back, price comes in, pull back, comes in, pull back, right? This is market structure, creating higher highs and higher lows. And we got this higher high. Now right here, this to me is very important. And let me just kind of clean that up for y'all so you can see what I'm actually looking at. So right here, why is this important for me? Because price came up, created this higher high, created a higher low, but I can see that price tried to go lower and it was like really rejected. I see this wick rejection, so I'm gonna pay attention to that. Price came back up, failed to create another higher high. So we no longer had a continuation of structure. That's interesting to me. Why didn't price continue? And then what we have here is price comes back down. It created a lower low here, okay? We refused to create a higher high. Now we created a lower low. So to me, this is a little bit of a break in structure. So once I see that break of structure, I'm going to tell myself, okay, I'm going to pay attention to this because we just broke a little bit of structure. And it's important for me to pay attention to any time we refuse to create higher high. It means not a continuation of structure. And now, because I see that we didn't break this level, to me, whatever is happening here is just for price to pull back to be able to create even higher highs. All right. And that might go over your head right now, but that's just what's happening. If we had a continuation of structure and price pull back down, I could see price coming all the way back down to this level and then moving up. Or since it didn't continue with structure, I can even see price going lower than this level right here. Let me actually get rid of this because this is no longer valid for me. But so I see that it created a, lower low. Here, we failed to create a higher high again, right? Sure, we broke this one, but this is the one that we got to break, and we didn't break that, right? So when I see this price action right here, this bearish engulfing candle, and then I see price come back into my level or close to my important level, and I don't see much bullish momentum, this to me is a trigger that price respected, pulled back, respected, came into my sell zone. Now I'm going to say, okay, whatever comes back and pulls in, I'm going to take that entry. Like that's going to be my jam. I took my entry. As you can see, price pulled down, came back up. I took another entry. Price pulled down, came back up. I took another entry. Now, right now, all of these positions, they're locked in profit. This one could potentially get stopped out in profit. So, I mean, all of them can. If price is to pull back to like this level right here, this is where I pretty much have my stop set right now. So yes, I've locked profits, but right now we have a pretty high pullback, right? Because if we look at these pullbacks, they're pretty small, really small, like it was all continuation of structure. But here we have a little bit of a break of structure, price pull back to this level. I can truly see price coming back to this level and then going back one more time. We're breaking. I need to see a clear break of the highs, a pullback for me to get into any more buys on GJ. I could short right now, but I need to see price not break this level. As long as price doesn't break this level, we're still continuing to the bearish side. So that's pretty much market structure, how I look at it. All of these are just scaling opportunities for price to come back in and for me to really maximize everything. So let me go ahead and pull up GBP USD here. Hopefully I didn't delete my markup so you guys can see kind of like the damage I've been able to do on GU. Yeah, okay, cool. Here we go. Look at this. All right, so this is what I mean. The market is just really our best friend, and it's going to give you plenty of opportunities for you to make bread in the market. So yeah, let's kind of break this down a little bit and see what we have going on here. So as you can see here, we have clean market structure, higher, lower highs, lower lows, lower high, lower low, lower high, lower low. And then we have some consolidation here. Right here, we have a clean break of structure. We broke this level right here. So once I see my break of structure, I'm like, all right, bet we're about to see some bulls in the market. I like to see that. Obviously, I know price is going to retrace. It did come back into my level, triggered us in for a buy, okay? So now, as you can see here, guys, I took 1, 2, 3, 4, 5, 6, 7, 8 positions on this. I got stopped out on 1. But in reality, this move from my entry to the top, this is about a 550 pip move. But in reality, I caught over 1,300 pips with this move because I was able to scale in as market structure gives it to me. Now, if I know as a trader that market structure is only going to be in position with higher highs and higher lows, or lower lows and lower highs, 30% of the time, that means when I see these opportunities in the market for me to take action, I'm going to squeeze as many pips out of this as possible because that's what market structure is giving me. And that's what's super important, right? Because I'm not going to trade, I'm not going to trade something on the tail end of a move like this. I'm staying out of the market with this. Like, I mean, GU is one of my favorite pairs because it does tend to trend a lot more than people think. So let's go ahead and take a look here. Now, I have a major demand zone here. I'm sorry, a supply zone here, and I'll explain to you why this was my supply zone. But as you can see here, price came in, tapped in. I let it do its thing. I let it come back to me because I needed to see a clear break of structure, which I saw, okay? And then I needed to see price come back into my order block levels, which it did, okay? And I needed it to trigger, and it did. And I needed price to pull back. This was also an opportunity for me to scale in, but I just wanted to see a little bit more bullish momentum before I actually took the trade. And as you can see here, once I saw that in just a minor pullback, I got back in. So now that we have this here, okay, this area right here was super interesting for me for a couple of reasons, okay? So as you can see, price, I'm going to go to a higher time frame here, so this just makes a little bit more sense to you. And I'm sorry that I like to trade like really looking away from it. I understood that this to me was a counter trend move. I want to make that very clear. Because of the higher time frame, I understand that it's bearish, and whatever happens here, this pullback, it's a pullback. This isn't like, this market structure is still bearish. In no way, shape, or form has it broken. Like, I don't have a clear break of these highs in order for me to say, oh, market structure has changed. All right, I hope you guys are following me here. So what ultimately, this right here is market structure, right? We have our lower low, lower high, lower low, lower high, lower low. Here, we didn't break structure, okay? This is still a lower high. Yes, it's higher than this one, but it's not higher than this one right here. It's not higher than this one, so we're still bearish, okay? Same thing, equal or lower lows, we got that. Create a lower high, lower low, lower high, lower low. Now right here, as I see market is doing this, I'm telling myself, okay, so now that price has broken this level right here, I'm going to see that the retracement that I'm looking for is here. All this is a retracement on this expansion, okay? So this is really a counter trend trade on GU being bearish, right? So now I knew that price was going to somehow, some way, shape, or form come up into these levels and respect this, okay? I knew, all right, I'm gonna get my my rectangle tool out. I knew that this level right here, okay, is what started the move, but I also knew that these levels right here are super important, okay, because this is where price was respected multiple times. But now I know that if price doesn't break these levels, I'm still going to be looking for bearish momentum. And as you can see here, when price came back up into this level right here, what did it do for me? It gave me what I needed to indicate that I'm going to be taking sells on GU. And that's essentially exactly what happened, because I'm in this trade and it's melted for me. Obviously, I haven't drawn up my scale-in opportunities, and actually I didn't scale in on this at all. I'm just running this one. I've trailed my stop losses into profit only because I've been busy and I didn't scale in. I could have scaled in right here. I could have scaled in right here. I could have had 3 positions open right now on GU, all based off of what? Pure market structure. So even if we go down to the 1 hour time frame, this is where the story is really being unfolded. So as you can see here, there's multiple scale-in opportunities for us, you know, to come in here and take multiple positions. So yeah, that's pretty much it. I mean, in terms of market structure, you're just going to want to see clear lower low, lower high, lower low, lower high, lower low, lower high. You want to see this clean market structure in order for you to continue trading. So yeah, like I said, this was a very important key level for me because I knew there's a lot of price action here. There's a higher time frame order block here that I wanted to, you know, make sure that I respected and that we took advantage of, and that's exactly what we did. But it's all about repetition. So what I want to do is I just want to show you guys one last thing before I stop talking here. I'm going to go to GU, but just on forex.com because it's not marked up. So what you guys want to do is go to the daily chart on your trading view. Okay. And what you're essentially going to do is you're going to say, I'm going to go back to, let's just say 24 months from today, right? So we have January 2022. I want to go back to January 2020. Okay. So I'm going to, as you can see here on the bottom, guys, I'm on August 30th, July 20th, May, January. Okay. So right here is January 2nd. So what I'm going to do is I'm going to take my little horizontal tool here, my vertical line, I'm sorry, and I'm going to find January 1. And I'm going to drop the horizontal or the vertical tool right there so I don't lose my place. And then what I'm going to do is I'm going to click right here where it says replay. And when I click that, I get this magical blue bar. You guys can see it running across my screen. And I'm going to come up over that vertical line I dropped, and I'm going to click right there. Boom. What it did was it deleted 2 years worth of TradingView data, and it brought me to real time, which is super exciting. All right. So now what I'm going to do is I'm going to drop down to, let's say, the 4-hour time frame. And now I'm exactly where I need to be. And what I'm going to do here is this little play button right here is going to draw one candlestick at a time. And I'm seriously just going to sit here and I'm going to take my horizontal tool, and what I actually not even, I'm going to find my ray, and what I'm going to do is I'm literally just going to press play, and I'm going to just find the most recent high and the most recent low, and I'm just going to keep pressing play. Now, you're probably asking yourself, well, what the hell is the point of this? Because this creates the environment in which the market is live, okay? And I'm going to do this for like an hour a day, just so I can see how the market is moving. Once I do this, and your only goal is to just find the most recent high and your most recent low. And the reason why I want you guys to do this is it because it trains your eye to see the market and marry the pair. Like, I know a lot of people say, oh, I just want to marry one pair. And I think that's beautiful and you should, or just a couple pairs. But this is how you marry a pair. You learn it, right? Because when you're in the markets, you're in the markets in real time. It's easy to find a setup, you know, after the market has made its move. But what's happening during the market? Look at that, right? Could you imagine, as you can see here, guys, look, we have our high here. Here's our low. Now we created a lower high. We have a lower low. If I'm seeing this in real time, ladies and gentlemen, I might want to go ahead and take a short position right here, because I'm going to say, you know what? I like this. This looks good to me. I'm going to come in here, place my stop loss there, and see what happens, right? I'm just playing around. I'm just playing around, guys. I'm just literally here finding my most recent high, my most recent low, right? You want to make the markets feel easy to you. You want to make the markets feel fun to you, right? So now I'm just pressing play on the bar replay. We got a little bit of a range. I love it. Continuation of structure. Bada bing. I'm finding my low, my most recent high. Now, ladies and gentlemen, I'm in profit with this trade, okay? I'm in profit with this trade. Currently, right now, had I been paying attention to the markets, right now, I am 100 and 200 pips in profit. My stop losses are trailed to the most recent highs. I have locked protected profits, meaning because I trailed my stop loss to the most recent high, that means I've literally locked in 80 pips and I'm running 200 pips, okay? See what happens. See what happens, okay? And we're a little bit of sideways. I like that right here. Look, we got our low here. Now my most recent high is now here. So now I've moved my stop loss further into profit, okay? All I'm doing is locking profits. I might get stopped out here, but in profit, we'll see what happens. Nope, did not get stopped out. All right, I just got stopped in profit right there. And let me see something here real quick. It's my little measuring tool. I don't even need my measuring tool. So that means I would have locked in 130 pips, right? And I only risked 40 pips. While that was running, that was like a 1 to 4 risk to reward, okay? You could have taken partials down here, or if you don't want to trail your stop loss into profit, this could also be another opportunity for you to scale in. So now let's see what the market does. That's my most recent high. I'm moving my most recent low back down to here. And we're just going to candle by candle, right? And we're just moving this to our most recent high, most recent low. Okay, we got a major wick up there. Let's see what comes from that. And then we broke our lows. So technically speaking, that could have been another scaling opportunity for you, right? Now, all we're doing, once again, this is it. It's super tedious. It's so annoying. But guess what? What did I talk about in the beginning of the call? David Goggins does what? Every time there's a dish in the sink, what does he do? He washes it. He makes his bed. He makes sure he keeps his house tidy. He's willing to do the things that other people aren't willing to do. And if you want to be a profitable trader, and if you want to be a successful marketer in the trading space, you have to be able to teach your people how to do this. You want to be able to put people on and show them the game. So this is all you guys have to do. Just back test. Back testing will be your best friend. Do this for an hour a day, 7 days a week for 2 weeks. And I promise you, you'll understand the market on a level like you never understood before. I know people who are trying to pass funded accounts right now, who are literally back testing 5 pairs 4 years back. They're not even going to take their challenge until they're done collecting data for 2 years. So, but yeah, that's pretty much it. I mean, you know, I'm not going to sit here and hold you accountable to, you know, going in and back testing. That's up to you. I showed you this version of back testing. Like I said, super annoying, hella tedious, but it's just going to help you understand the markets a little better. Now, it allows you to see the market in real time, because a lot of the times what you're seeing in the market isn't true, because you're watching it, you know, after the fact. I mean, it's like having the winning lottery numbers, you know, after the lottery has already been called. You're not going to be able to scam anybody into that ticket, right? Same thing here. Now look, something like this I pay attention to, okay? Because I'm on GU. Look at this. All right, guys. Obviously, we have bearish momentum here, but then what happened here? We have this huge wick, major indecision on the 4-hour time frame, and we have this major bullish engulfing candle. Why? Let's look down. What do we see here? There's news, right? What could have affected the market? Okay, now I'm going to see what news this is, right? PMI, whatever the heck that means. United States, PMI. Okay, now I want to make sure I got my Forex Factory market comp flash PMI. So these are the things you want to pay attention to. But I'm curious to actually see what happens next. Let's see. So this is our most recent high. This becomes our most recent low. I'm just curious to see what happens, because that's a major bullish engulfing candle. Look at that. You see that? Like if you were paying attention to this and you were able to get into that move right there, right? You could have truly put yourself in a position to get in on that wick right there. That would have been 200 pips, right? You would be able to lock your profits. Let's say if that's your most recent high right there, this is your most recent low. Your profits would be locked like right there, right? You would have gotten stopped out in profit. You would have banked 150 pips, right? 150 pips banked. Wow. Incredible. What happened? Price came back to our what? This is a supply zone right here. It melted. Incredible stuff. You also got a little bit of news action coming up here pretty soon. So all you have to do, this is your most recent high. Here's our most recent low. That's a big gap between a high and a low. Boom. Wow. Crazy. Crazy. So as you can see, ladies and gentlemen, it's just about getting familiarized with the market. You know, that's it. That's all it is. Just do this for like an hour a day, 5 to 7 days a week. It'll change your entire trading game completely. So yeah, that's pretty much it.
Awesome. Thank you very much, Ellie. I really appreciate you taking that much time to show people. So, I mean, that's the thing, you know, reading a book is one thing. Actually putting what you learn from the book into work is a completely different thing. So, but I mean, just think about this. I know a lot of that stuff might have been over your head, especially if you're brand new, but it's just like any other skill set. It's just like going to, you know, college for any other degree. If you put in the work, if you treat it like a business, you'll get paid like it. If you treat it like a hobby, it'll cost you like a hobby. And that's the thing. You really want to do it, you got to put in the time and effort. And it's all about consistency. If all you have is 30 minutes a day, put 30 minutes a day into it. You can't just put like, don't do this. Don't spend 3 hours one day and then don't schedule any time. And then like 3 weeks rolls around and then you try to do it again. You're not going to retain the information. This class that we do every week, it's proof of it, because every week we go through things, and a lot of people that don't read that book throughout the week, they don't remember what we went over last week. We can look at that same, because this session we did today is the exact same session we did last week. We didn't even advance in the book, because I can tell that there's no reason to advance if we haven't retained the information from the previous week. So now that you have these 2 recordings from last week and this week, and you've seen some examples from Ali, how it actually looks on the market, hopefully that all of this information will stick better. So we will continue next week. Let me just see what page we left off on. The last page we read was 56. So Kathy, Demi, if you can just make a note of that. So we'll start from page 58 next week, and we're going to go over support and resistance. So everybody have a great weekend.
I have mentorship tomorrow with Julian.
Yeah, what time is it?
Tomorrow, 2 p.m. EST.
Okay, so 2 p.m. Eastern, we have mentorship with Julian. The link will be in the chat rooms. Make sure to jump on that. If you guys want to mark up your charts, go ahead and mark up your charts. Circle all the patterns you see, label them, send them to me or Ali, or put them in the groups, and we'll look at them and make sure that see how it's coming along. Don't be afraid to be wrong. Being wrong is better than not trying at all. So the only way you can become right is if you continuously do it. So mark up the charts, send it to one of us. We'll look it over and stuff and see how your progress is doing. And hopefully, a few months from now, everybody's going to be trading on their own. Remember, we have amazing signals, but the objective is to become the signal, to be able to do this on your own. In the meantime, when our educators give you signals, take them. If they work out or if they don't work out, go back and look at why they worked out. Look at that trade on the chart. Don't just take it and cash the money and say, oh, this is easy. I can just copy and paste signals for the rest of my life. You still want to know why the trade played out the way it did. All right. So if you guys have any questions, reach out to us and we will talk to you next week. Thank you very much, everybody. I will try to have this recording up by tomorrow. All right. Take care. Bye-bye.